Good day, YouTube. This is Jay Money with Falling Forward Financial. Just an update here on Lucid. I've talked about them a couple times around the channel. Talked about numerous EVs, Lucid being one of them. As you can see, they're down over 22% in the last year. Was in the $55 range at one point in time. I'm sure it'll go back there. Down over 19% in the last 3 months. In the past month, down over 9%. Actually in the green, 0% here in the past week, so pretty much trading sideways. And here's a look at today, a little bit in the green, but ticker LCID. I've been covering this one for a while, before it was even on the NASDAQ. I think the ticker changed. I can't remember. I'd have to look back through the videos, but this is an EV, luxury EV. Supposed to be competition for Tesla, but we'll see. But EV stock founded in 2007, market cap of $27.20 billion, high today of $16.45, low of $15.86, 52-week high of $57.75, and a 52-week low of $13.25. Average volume of 13.33 million and volume today of 5.38 million. Look at the ratings, 43%, pretty much buy and hold. So ratings or earnings are next expected on November 14th. And I've covered all these down here as well. Some more EVs. Moving on here, cash is king for EV makers as soaring battery prices drive up vehicle production costs. As you can see, this is dated here the 28th. Established automakers and startups alike are rolling out new electric vehicles in an effort to meet growing demand. Rising costs and now federal regulations are adding new pressures to what was already an expensive process. CNBC runs through where some of the most prominent American EV startups on the last few years stand when it comes to cash on hand. Production of electric Rivian R1T pickup trucks on April 11, 2022 at the company's plant in Normal, Illinois. So, kind of cool. I always like seeing factories. I don't like working in them, but I like watching how everything works. It's very interesting. And the transition from gas-powered vehicles to electric, the fuel every automaker is after these days is cold hard cash. Established automakers and startups alike are rolling out new battery-powered models in an effort to meet growing demand. Ramping up production of a new model was already a fraught and expensive process. But rising material costs and tricky regulations for federal incentives are squeezing coffers even further. Prices of raw materials used in many electric EV batteries, lithium, nickel, and cobalt, I've talked about all of these at some point in the channel, have soared over the last 2 years as demand has skyrocketed, and may be several years before miners are able to meaningfully increase supply. Complicating the situation further, new U.S. rules governing EV buyer incentives will require automakers to source more than of those materials in North America over time if they want their vehicles to qualify. Automakers routinely spend hundreds of millions of dollars designing and installing tooling to build new high-volume vehicles before a single new car is shipped, and nearly all global automakers now maintain hefty cash reserves of $20 billion or more. Those reserves exist to ensure that the companies can continue work on their next new models if and when a recession or a pandemic takes a bite out of their sales and profits for a few quarters. For newer automakers, the financial risks to designing a new electric vehicle can be existential. Take Tesla. When the automaker began preparations to launch its Model 3, CEO Elon Musk and his team planned a highly automated production line for the Model 3 with robots and specialized machines that reportedly cost well over $1 billion, but some of the automation didn't work as expected, and Tesla moved some final assembly tasks to a tent outside its factory. That's just kind of funny. Tesla learned a lot of expensive lessons in the process. Musk said later called the experience of launching the Model 3 production hell, and has nearly brought Tesla to the brink of bankruptcy. As newer EVs ramp up production, more investors are learning that taking a car from design to production is capital intensive, and in the current environment where deflated stock prices and rising interest rates have made it harder to raise money than it was just a year or two ago, EV startups, cash balances, and getting close attention from Wall Street. Here's where some of the most prominent American EV startups in the last few years stand when it comes to cash on hand. Rivian, I just did a video on them within the last week, probably a couple videos on them. Production of the electric Rivian R1T pickup trucks in April 11, 2022 in company's plant in Normal, Illinois, is the far best position of the new EVs, with over $15 billion on hand at the end of June. It should be enough to fund the company's operation and expansion through the planned launch of its smaller R2 vehicle platform in 2025. The CEO said during the company's earnings call on August 11th. Company burned about $1.5 billion in the second quarter, but it also said it plans to reduce its near-term capital expenditures to about $2 billion this year from $2.5 billion, and its earlier plan to ensure it can meet its longer-term goals. At least one analysis thinks Rivian will need to raise cash well before 2025. In a note following Rivian earnings report, Morgan Stanley analyst Adam Jones said that the bank's model assumes Rivian will raise $3 billion via a secondary stock offering before the end of the year, and another $3 billion via additional raises in 2024 and 2025. Just did a video on Lucid as well, probably last week or the week before, and always try to stay on top of Lucid. So the People Test Drive Dream Edition P and Dream Edition R electric vehicles at the Lucid plant in Casa Grande, Arizona, September 28 and 2021. So kind of an interesting looking car, actually. Luxury EV maker Lucid doesn't have quite as much cash in reserve as Rivian, but it's not badly positioned. End up second quarter with 4.6 in cash, down from 5.4 at the end of March. That's enough to last well into for the most part. Wall Street analysts were unconcerned about the Lucid second quarter cash burn. Bank of America John Murphy wrote that Lucid still has a runway into 2023, especially considering the company's recently secured revolver $1 billion credit line and incremental funding from various entities in Saudi Arabia earlier this year. Murphy has a buy rating on Lucid stock and a price target of $30. He's compared the startup's potential future profitability to that of the luxury sports car maker Ferrari. Lucid currently trades at about $16 per share. Next is Fisker. I've talked about them a couple times. People gather to take a picture of the Fisker Ocean, all-electric SUV. Was revealed at Manhattan Beach Pier on November 16, 2021 in Manhattan, California. That's kind of a cool car. Ocean. Unlike Rivian and Lucid, Fisker isn't planning on to build its own factory to construct its EVs. Instead, the company formed by former Aston Martin designer Henrik Fisker will use contract manufacturers, a global auto industry supplier Magna International and Taiwan's Foxconn to build its cars. Represents something of a cash trade-off. Fisker won't have to spend nearly as much money up front to get its upcoming Ocean SUV into production, but it will almost certainly give up some profit to pay the manufacturers later on. Production of the Ocean is scheduled to begin in November at the Austrian factory owned by Magna. Fisker will have considerable expenses in the interim, money for prototypes and final engineering, as well as payments to Magna. But with $852 million on hand in the end of June, it should have no trouble covering those costs. Next is Nikola. I've covered them a couple times. Was one of the first EV makers to go public via merger SPAC. Long-range hydrogen fuel cell version of the tray in 2023, but as of right now it probably doesn't have the cash to get there. The company has had a tougher time raising funds following allegations from a short seller, a stock price plunge, and ouster of its outspoken founder, Trevor Milton, who is now facing federal fraud charges for the statements made to investors. Nikola had $502 million on hand at the end of June, plus another $312 million available via the equity from Trumham Stone Capital. Next is Lordstown. Gave rides of the prototype and upcoming electric endurance pickup truck in June 21 of 2021 as part of the Lordstown Week event. Another interesting looking truck there. So with just $236 million on hand at the end of June. Nikola Lordstown said that its stock price collapsed after its founder was forced out following a short seller's allegations of fraud. Completed the deal in May to sell the Ohio factory, a former General Motors plant, of Foxconn, for a total of about $258 million. Despite the considerable challenges ahead for Lordstown, Deutsche Bank's Rosner still has a hold rating on the stock, but he's not sanguine. He thinks the company will need to raise $50 million to $75 million to fund operations through the end of the year, despite the decision to limit the first production batch of the Endurance to just 500 units. Moving on here, Microsoft Bing currently showing it as a buy with an upside to a $26.50, so it looks like a $10 appreciation there. Given consensus rating of a moderate buy by Analysts, but if you're in these for the long term, which I am on pretty much every EV, at least 5 to 10 years, you're going to see the biggest return. The rating shouldn't make that much difference. If you believe in the company and believe the stock's going to go up, that should be the selling point for you. But they've earned a consensus rating of a hold, and we'll go over more at the end. The 8 analysts that are currently covering the stock, Market Beat reports. One investment analyst has rated the stock with a sell rating, 2 have issued a hold rating, and 4 have assigned a buy rating to the company. The average 1-year price among brokers that have covered the stock in the last year is $32.83. Separately, Citigroup decreased their target price on Lucid Group from 36 to 28 in a research report on Tuesday, August 4th. Institutional flows, inflows, and outflows. Several institutional investors have recently modified their holdings of the business. TrustScore Financial Services lifted their stake in shares of Lucid by 180% in the fourth quarter. TrustScore Financial Services now owns 812 shares of the company's stock worth $31,000 after acquiring an additional 522 shares in the last quarter. So kind of some more trades going on over here on Reddit. Nothing up to date there. Over here on StockTwits, currently at 16.29, low of 13.25, high of 57.75. Anyone? Nope. I haven't even heard of that one. So we'll just go on. Saudi government owning a company and spending money to make cars that they promised to buy. What else to know? Big green is coming. I say big green is going to come on a lot of the EVs, but MSN money currently at $16.30 with a buy ranking, again a $26 price tag on Lucid. That if you have Lucid, go ahead and list that in the comments along with your cost basis, any other information you'd like to share. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.